We are back with another edition of Talk Mortgage to Me. I'm with my friend Ashley Bedford, top 1% mortgage broker in the entire United States. And today's scenario is a very common scenario. We're going to deal with divorce. We're going to deal with income that you can't necessarily use for qualifying, not because the income doesn't exist, just because the guidelines don't allow for the income to be used. And you're going to be introduced to a single mom who wants to move but has limitations on where she can move because of what's written in her divorce decree. And what happens when one lender says yes, but then halfway through you find out the answer is no? Do you give up, or do you find a new lender who understands how to find a way to yes? I have a feeling when we get Ashley talking, she's going to be that lender that found a way to yes. So Ashley, walk us through the scenario.
So I had a local realtor reach out to me and ask if I could save a deal. And I asked for the scenario. They were halfway through the transaction, a single mom who was trying to move out of her condo, but she wasn't allowed to sell that condo and do it simultaneously because her divorce decree had parameters around having to have a closed house in that school district before moving out. So it had strict parameters.
Her divorce decree would not allow her to sell the condo until she already owned.
Or rented.
Or rented another place.
Absolutely.
However, in order to buy and finance a new place, you probably need to qualify for financing, which means you now need enough income to cover not one mortgage, but two mortgages. Okay, I see where you're going with this. I think what's important, a realtor called you. This is where you trust your real estate agents because they're supposed to have some of the best connections in their local market. And that realtor said, Ashley, I need you to save a deal because another lender is getting ready to deny this loan.
And she had already paid for appraisal and inspection. So that's already $1,000 out of a single mom's budget. And her mom had just died and left her a trust, but she couldn't utilize that trust income because the guidelines had changed, but the originator hadn't stayed up with those guidelines to know that they changed.
Okay, so in this scenario, the loan originator thought they were going to be able to use $3,000 a month in trust income. And that trust was new or newly established or newly paying out. It was probably established decades ago. But it hadn't been paying out because the benefits of the trust only got paid out when
upon death,
and the mom has just passed.
So
the guidelines are going to read, and when we talk guidelines, we're typically thinking conventional conformity.
The
rules, I always try to think of like the Wizard of Oz, and it's like, you know, the wizard behind the curtains. But no, there are written rules. You can look them up. Fannie Mae, Freddie Mac both have selling guides. And those rules stated if you want to use trust income, you have to show 12 months of receiving that income consistently and on time.
Which has changed recently.
And by the way,
always changing.
By the time this posts, there's a good chance that at least 3 guidelines have changed. I don't know if those guidelines are on trust income or they're on something else, but I promise you they've changed. But nonetheless, at the time, this is what you needed. At the time, the other lender wasn't aware of the changes, thought they had more income than they did. So now they're coming to you and you're like, look, that is the guideline.
Well, and told her to not pay her credit cards down and stuff like that, which could have boosted her score. So I'm also doing a rescore on like multiple accounts.
Okay. So let's put a bow on. Just know this. They meaning the other lender, thought they could use more income. You said, sorry, you can't use that income. The underwriter is right. Those are the guidelines. But at the same time, you said there's other things that the other lender could have been doing that they didn't do.
She had plenty of money to pay off debt, and he told her not to.
Okay.
And everybody who's worried about getting your credit pulled, that really has no effect. It's your balance ratio. And her balance ratios were high because she was just like, well, he told me not to pay them.
Oh, gosh. So
her score had dropped because that will drop your score quicker than any inquiry. So
her credit score wasn't even the best.
No.
But you're saying had she called you early enough, it could have been better because you would have coached her through
100%.
some proven strategies to pay down debt, get your balance to limit ratio in line, at which point you could have, within 5 to 10 days, got her credit score up 20 to 40 points.
And
now, would that have helped her qualify for the conventional loan?
It would not, but she couldn't even qualify for the loan I was going to put her in. But thankfully, and this is why I said I would rather lose my life than my reputation, I knew the agent on the other side of this too.
Okay, so you
on
knew
the listing
the agent
side
representing the seller.
Yes.
Okay.
And so that saved our lives. I was able to relate back a deal that we had closed before. I said, oh yeah, I remember we closed so-and-so, so that she could know that that was seamless and that I was the real deal and not just like, hey, I verified, because you now got another lender saying declining. So my reputation preceded me, which was all that mattered.
So what'd you have to do? Call that
I
listing
called
agent?
her and I was like, hey, listen,
Did you
I
need
know
more
you're
time?
Yeah, and then there was
Okay.
$50,000 of hard escrow deposit
Wait a minute.
in my hands.
Whoa.
Yes.
So not only was this single mom, newly
Yeah.
divorced, whose mother just passed away,
Yes.
going to not get this home that she wanted to
Yes.
buy, but she was going to lose potentially $50,000 deposit
Yes.
that she put on the home.
Yes.
Okay.
Hard escrow
Yeah,
deposit.
hard. Yeah,
By
hard,
the time
hard
it's in
means-
my hands.
Hard means you ain't getting that back.
No.
Okay. So you get the deal. The first
Yeah.
thing you look at is like, okay, I can't qualify this person conventional.
Yes.
The second thing you look at is why is her credit score lower than it needs to be?
Yeah.
Why did she not get some better advice early on in the process?
Yes.
And then third, you're like, I can do this loan, but I can't do it in the time frame. How do I save this lady's $50,000 and get her the home? And it started with you having a great relationship in your market.
Yeah.
You picked up the phone, you called the person representing the seller,
Yes.
reminded them that you'd worked together in the past, explained the scenario, and then what did you do? Ask for an extension?
I begged for an extension and promised her that I was going to get this done. I just needed time because time. Oh, and I'm about to leave on a cruise.
Oh,
But it's fine because I work on all my cruises. Don't worry. And so I'm about to leave on a cruise and I have to do a rescore. And mind you, like anytime you do a rescore, the consumer cannot be charged. This is something that us as LOs have to pay for, and it's not cheap either.
Correct. Several
But I had
$100
so much.
many times.
Oh yeah, I had so much confidence that I knew that this was going to happen. And so thankfully we have some alternative lenders that still meet all the Dodd-Frank rules, but allow a primary residence with no income to qualify.
Okay, so this is
Yeah.
this is what you did.
Yeah.
Okay, so you got a credit score up.
Yep.
Because sometimes these alternative loan products do have more restrictive
680
requirements.
requirements.
Yeah,
things
you
like
need a
that.
680 or sometimes a 720 credit score.
Can't even order an appraisal yet, and time is clicking.
Time is clicking because
Yeah.
you need time for the rescore because
Yeah.
they don't happen in days. They sometimes
No.
happen in weeks.
And they won't let you submit it without it. So
Yeah, well, you need the rescore to submit the loan.
Yes.
And yeah, you need to submit the loan to order the appraisal.
Yes.
And you can't fund the loan or until you get the appraisal back.
All the
while
things.
you have a mad seller.
yes,
You have a nervous home buyer.
terrified, thinking that I'm going to decline it all the steps of the way.
Yes.
Yeah.
Okay. So you do the rescore and you get the score up.
Yeah.
You then can submit the loan, but what type of loan? I think this is what's most important. What type of loan did you end up doing?
It's a non-qualifying loan, but still meets all Dodd-Frank requirements, no ballooning, no interest only, things like that, that they allow. And the rate is higher, so I always preface that to everybody, what this looks like, but in 12 months we'll refinance.
Okay, so we call these non-QM loans in the
Yes.
mortgage space. It's called not a qualified mortgage.
Yes.
Right. Back in the day, we would have called them alternative A.
Yeah.
Right. It's still an A paper loan because there's a down payment, there's
Yeah.
a sufficient credit score. We're not talking subprime.
Absolutely.
But-
not ballooning, not, yeah.
It doesn't have negative amortization. It
Yeah.
doesn't have interest only. It may be an ARM, but the interest rate's fixed for probably 5, 7, or even 10 years. Do you
Yeah.
recall, was yours
It
an
is
ARM?
fixed. It's
It
actually
was
a 30-year
30-year
fixed.
fixed.
Yeah.
So a 30-year
and it's not
fixed.
the most attractive, okay, but it gets her into the home to meet her goal to get there.
Yeah, so the rate was
Yeah.
8%, not 6.25%.
Correct, yeah.
Yes, but yeah, you saved her $50,000.
She was comfortable with the payment for right now. I was able to save the $50,000 because that's her payments for a year,
Mm-hmm.
you know, if she had lost that. And I was able to get her into that and for her daughter. So, and also on reputation, this is why spoil your title companies, because also I know the title company very well. And so guess what? Whenever the listing agent called the title company, they're like, oh, it's Ashley, she's fine.
Yeah.
Yeah.
I mean, I think that's just the importance of
Yeah.
working with local professionals
Yeah.
who have a network of other professionals they've worked with. They can vouch for one another,
Yes.
which means they can vouch for that client that you're representing.
Absolutely.
I think the important thing for people to know in general is most of us don't want a mortgage. Most of us lay in bed dreaming about the day that we pay off our mortgage.
Yes.
But we want a home.
Absolutely.
Because homes is where we raise our families, homes where we make
Yeah.
memories, homes provide us with safety and security.
And they got a dog.
Yes.
Yes, you can't have a dog in a
you can't have
condo,
a dog in
really.
a
There's no
condo.
yard.
Yeah, so when there's a will, there's a way.
Yeah.
If you're hearing no, it doesn't mean it's a no forever. And it might not even mean it's a no for now.
Yeah.
What it means is that you might not be talking to the right people who have the right
Yes.
access to the right loan programs.
Yeah.
Ashley was able to take someone else's no and turn it into a yes
Yeah.
by utilizing a non-QM loan or a alternative financing. Some people call it creative financing. And the best part is, how long did she have the loan for before you refinanced it?
So we haven't refinanced yet because this actually recently happened.
Okay.
So we'll refinance at 12 months.
Yep. So in 12 months, the minute you can start using that trust
Yeah.
income,
Yeah.
and that condo is probably sold.
Yeah.
Now all of a sudden she has a higher credit score, she has more usable income, she has less debt.
Yes.
And you'll be able to refinance her into a much cheaper loan product.
Absolutely.
Once all those things take place.
Absolutely. Yeah.
I absolutely love it. Y'all, that right there is a story that makes many of us want to continue staying loan originators, and it's what brings others into the industry.
Yeah.
If you or someone you know is faced with a scenario where you're being told no, make sure it's not a forever no by getting a second opinion. If you want a second opinion, you can always reach out to Ashley Bedford, or you can click the links below where you'll be eligible for a free home buyer consultation.